Happy Tuesday. Thank you for joining us. Today's webinar that is being hosted by Agency One, we're going to talk about estate planning strategies for foreign nationals using life insurance, and our featured speaker is coming from Prudential. I hope everybody knows that I am Kathy Neifeld, a partner with Agency One, and Agency One is pleased and delighted and proud to bring you these webinars from our carrier partners on a regular basis. Today, as I mentioned, we're going to be talking about life insurance opportunities and strategies for foreign nationals. This is a space that has always interested me because there's a lot of different things that are involved from a tax and planning perspective. When dealing with foreign nationals, it's definitely a specialty market, but it's a market that can be extremely interesting, rewarding, and lucrative when folks decide that this is a space that they want to concentrate in. Our featured speaker is Vicente Pina, who is the Director of Advanced Planning at Prudential. Vicente has over 35 years of industry experience, including 15 years in advanced planning and advanced marketing. As I mentioned, he's a director on Prudential's individual life insurance advanced planning team. He has worked predominantly in the development, marketing, distribution, and support of life insurance. His primary focus at Prudential is life insurance planning for the ultra affluent, strategies for high net worth and foreign national clients, and advanced case design. I'm going to turn this over to Vicente. If you have any questions, please either type them in the chat or in the Q&A, and we will address them as they are submitted at an appropriate time when I feel like it's timely to try and interrupt Vicente to deal with the questions, and we'll certainly open it up for questions at the end. So without further ado, Vicente, I'd like to turn this over to you, and thank you.
Thank you, Kathy, and thank you, Lisa. Thank you, Gonzalo. Thank you, Agency One, and my colleague Lenny Paul for putting this all together. And this is an exciting market. Part of it is because I was a foreign national. I worked for many years in our industry in Asia and Latin America. Worked in everywhere from Taiwan to Hong Kong to Singapore, South Korea, Philippines, as well as most of South America. And so we're going to get into this. As Kathy said, ask any questions. You're actually going to find that this market is not as much a niche as it used to be. It's actually becoming a major part of the market. There's data out there from the U.S. Census Bureau that 25% of all households in the United States have at least one person born in another country. So just think about your neighborhood. Think about the people you went to college with. Think about the people you work with. Many of them came from elsewhere. They all didn't just, born right here in, your hometown, right? So think about that, and think about advisors who are working this market, and also advisors who live in places like DC, New York, any metropolitan area where there are people who were born elsewhere, frankly. And that's a tremendous market, and they have the same needs that most other insurance people who need insurance have. So we have several pieces. Lisa will send these out to you. This happens to be one of our PowerPoint decks that we have. But I'm going to go kind of more into the details of the market, how to write this kind of business. And so I'm going to switch out of this, and I'm going to get into one of our PDFs that we have available, and it basically is a more of a strategizing document for going after this market. And so when we talk about foreign nationals, we're really talking about two types of individuals. They are individuals who were born in another country but now live here full time, and people who are born elsewhere but they only come here periodically. So, as I said, earlier, the foreign-born population is huge. It's 26% of the children under 18 in the U.S. have at least one immigrant parent. It's just, I mean, look in my own neighborhood. I live in a little cul-de-sac here in Beaverton, Oregon. And, there's a Filipino woman married to an American guy. There's a Colombian guy married to an American woman. So there's a guy from the Dominican Republic married to an American woman. So it's huge. Now, part of it is think about the employers in the area where I live. Nike is the largest employer, probably the largest employer in Oregon, but also Intel is a huge employer, and they're bringing in people from Europe. They're bringing people from Latin America. They're bringing people from Asia to work here. And so, there's so many foreign nationals around my neighborhood. I see them when I go out for lunch. They're walking around the neighborhood. They're kind of like, for those of you that have been to Europe or to Latin America, it's kind of, they're just going for a walk at lunchtime. And you see, and many of them are, chatting and talking and catching up. So it's all around us, and particularly, I would say, certainly in the DC area for obvious reasons. So, um, as I said, there's two groups. There's the non-resident alien and the resident alien. And again, the only difference is one is living here, the resident alien. They're living here, so they were born in another country, but they're living here full time. The good news about that market is that's regular business. Regular business. You don't have to do anything special. You have a client, or maybe you have a prospect, or maybe you have an advisor who has clients or prospects that were born in other countries, but they live here. They have their kids go to school with your kids, their kids. Those folks, those resident aliens, it's normal business, nothing special. You could write them today, nothing special. The non-resident aliens are folks who were born elsewhere, but they come here periodically, say 3 or 4 months a year. The example I like to use is you have a lot of Europeans that come to, say, Florida in the wintertime. I can remember going to a spring training game in Tampa and actually in Dunedin, and went to see a Toronto Blue Jays games, and 90% of the people in the stands were Canadians. Now, those Canadians are coming down to Florida in the wintertime. They're going to see the Blue Jays, the Red Sox. They're going to enjoy the whatever, the nice weather, but they're not here full time. They live in Canada, but they come down for a month or 2 or 3. Those non-resident aliens, there's an opportunity there as well. Now, there are some requirements, some more hoops to go through, but we can still write them depending on the country that they're coming from, and we'll get into that country, the countries that perhaps are more attractive to you and I and to insurance companies in other countries. So now that we've established they're into two groups, resident aliens is easy business, nothing you got to do special. Non-resident alien requires a little bit more work, but we're going to go into that, and it's pretty straightforward. In terms of the similarities, they have the same needs that everyone on this call has, right? If they're married, they have income replacement, salary continuation. They certainly want to leave something for their heirs. Most of these folks have a really big concentration or focus on making sure their kids go to college. It's kind of a cultural thing. And so they definitely want to make sure they have enough insurance to help their kids pay college and have it paid completely by some mechanism like life insurance, eliminating debts. We all want to eliminate debts, and of course, they're no different. I would say a lot of foreign nationals really don't like credit. They don't like to, have a lot of debt because in their home countries, they're typically not incurring a lot of debt. So certainly playing up, getting rid of the debt, getting rid of the mortgage, getting rid of the credit cards. That's a big selling factor. And last but really not least is there's an estate tax angle, particularly for non-resident aliens. And we'll get into this, but if you think about non-resident aliens, most of their assets are outside of the U.S. Let's be honest, right? If you live in France and you have a home, maybe, or apartment in the D.C. area, maybe your children married Americans, and now you come to visit because your grandkids are in the local area. Well, you're here 2, 3 months a year, but your assets in the U.S. are subject to estate tax. And the exemption amount is only, anyone know? You can type it in the chat. It's only $60,000. There we go. Somebody did mention it in the chat, and they did 60. Great job. So 60,000. So what does that mean? That means that if you own assets in the US more than 60,000, which is almost anything, it's basically a car, maybe certainly your home. I don't think you can buy a home in the US anymore for $60,000. Any asset you own in the US that's over 60,000 is subject to US federal estate tax. Most non-resident aliens don't know that because that kind of tax regime doesn't exist in their country. It's unfamiliar to them, and so that's gonna be another kind of motivating factor for them to buy life insurance, particularly if they're successful, right? Think about the non-resident alien maybe that has $1 million apartment in the DC area, or maybe they buy an apartment for their kid or their daughter-in-law, son-in-law, and their spouse and their family, or maybe they buy a home next to the grandkids. So therefore, that's an aspect that they're not aware of that you'll be aware of, and you'll be able to help them. The resident aliens, they're treated like everyone on this call. They're taxed on their worldwide assets, which is kind of a good and bad. It's bad from the standpoint that most resident aliens are not aware that they're taxed on their worldwide assets, meaning, their home in France, their home in Taiwan, their home in China for that matter. If you're a resident alien, you're taxed on your worldwide assets. Now, the kind of maybe positive part of that is they do share in that $13.99 million exemption that we all have at the federal level. Many of you know that we have an exemption at the federal level of about $14 million. So we'll get more into that. But again, another takeaway is that there is an estate tax angle to working with particularly successful, high net worth, affluent, non resident aliens and resident aliens. As I said, there's some differences. Some cultures, embrace life insurance, some don't. Some countries have life insurance, but the face amount is quite small. I can remember working in Argentina and working in Brazil, and even in Colombia. The face amounts that they can get are fairly low relative to what we can get in the US. And then on top of that, they like the US dollar. Let's be honest, the currency in other countries tend to fluctuate. Remember working in Argentina back in the early 2000s, and they went through 5 presidents in a matter of several months, and the currency was devalued several times. They actually changed their currency a number of times. And so it's really for the high net worth and the successful resident alien or non-resident alien, they would prefer to buy their insurance in the U.S. For lots of reasons, not the least of which is certainly our economy and our currency is fairly stable. We talked a little bit about non-resident aliens. Again, they're not U.S. citizens because they were born elsewhere, and they're not primarily living here. They come here maybe, 2, 3, 4 months a year. They may own a home here. They may own a business. I know in different parts of the country, they may have, they may own a business. They may be a passive owner in a business, or as I said, they may own real estate here. Now, as we said, high net worth and affluent non-residents, they know what their home country risks are. And it's almost like we hear about the non-correlated asset. Well, here's a non-correlated risk to their home country. They've got assets in the U.S. that they want to protect. They have insurance that they know isn't going to fluctuate or get devalued in like their home country currency. There are some tax issues in some cases with assets owned in the U.S. versus assets owned elsewhere. We don't, at Pru, don't really get into the income tax aspects of it, but certainly, we're going to pay the death benefit income tax free. So that's an important thing. So when I wrote this piece, I was kind of thinking about an example, and so I went down here and I had this woman in my mind, Christina. I made her up, a non-resident alien, and she's domiciled in China. Now, I only picked China because China and Mexico tend to be the two of the more common countries we see business from, but we do see it from the UK, we see it from Germany, we see it from Italy, we see it from other countries, but I would say China and Mexico are probably the two more common. And anyway, she comes to the US to visit family and friends. She went to college here. Maybe she went to GW like I did. And she also comes here for business. She's a successful executive. And of course, when you come to the US that often, it just makes sense at some point. Well, I may as well establish a bank account here. That way I can do, any kind of business I want. And she decided I'm going to buy a condo here on the East Coast of New York. And so, it gives her a little bit of a footprint here. She doesn't have to go to a hotel every time, doesn't have to worry about transaction fees with her, international bank account back home in China. She just has a regular bank account here and a home here. She doesn't live there year round, but she's there, maybe 2 or 3 months a year. Her assets in the U.S. are subject to federal estate tax. So let's be conservative. That condominium in New York City might cost $1 million. Well, with a $60,000 exemption and a 40% tax, federal estate tax, I mean, basically that whole condominium is going to be subject to estate tax. So if she were to die 9 months later, that estate tax is due, federal estate tax, and it's 40%. So her estate, maybe her family, maybe she's got a partner, that person or the executor is going to have to basically sell that to pay the tax because 40% of 940,000 is still 300 and some odd thousand dollars, and 300 some odd thousand dollars, unless she has that in her bank account, it's going to be that's going to what has to be paid to the IRS. So that's just a simple example of someone just owns one asset in the U.S. And that asset is significant. It's certainly more than $60,000. Um, I mentioned a little bit about income tax. We probably on the life insurance side of our business don't talk a lot about income tax, other than obviously the death benefit being income tax free. We all know cash value grows without any tax. You can take withdrawals. There's no difference in the product. Let's just put that right out there. You sell them a Prudential permanent insurance policy, it's not going to be any different than if one of us on this call bought that same product. I will say the government does track how long you're in the U.S. There's a reason why we go through security and we go through Homeland Security because they can track how many days you are in the U.S., just like they can track how many days I was in France recently. Because when you go into the country, they have that data, and when you leave the country, and the same thing in the U.S., they know how long. So you might have some clients who might be here 6 months and they're kind of bordering. And so if they're a resident and they fall on the resident side, then it makes the whole process of selling them life insurance much easier. If they're on the kind of the underside of that, say 138 days or less, then they'd be considered a non-resident. Again, we don't get involved in the substantial presence test, but just be aware that the government is watching how long clients are here, prospects are here, all of us are here. And so I would say most of the cases we see, they're very heavily weighted one way or the other. They're either, clearly non-residents. They're here for a month or two. Like I said, they go to Florida, maybe they go to Arizona, maybe they go to Disney World with their kids, that kind of thing, but they're clearly only here for a short amount of time, relatively speaking. Or they're just residents. They're here all the time. And then they go visit maybe their home country, but they're here all the time. We get a lot of questions about visas, and it's really not important for us from the visa standpoint, from an underwriting perspective. And what I mean by that is we pay attention from an underwriting perspective to residency. We want to know, where do they live? Why do we want to know where they live? Because that's where all their medical information is. If I live in France and I have a French doctor, I have a French pharmacy, I have that, or if I live in China, all of that. But if I live in, the DC area, I live in Maryland, but I'm from France or I'm from China, well, my medical records and all my underwriting, my motor vehicle record, my driver's license, all of that is right there in Maryland or right there in DC. So that's wonderful because that means it's easier to get that medical information. So we pay attention more to residency than citizenship. We pay more attention to residency than visas per se. Now, I'm going to talk a little bit about the estate tax. I think we touched on it earlier. There's certainly, they want to know, the government wants to know where you're primarily domiciled, and where you're primarily domiciled determines the assets that are included in your estate. So, without going into a lot of depth, suffice it to say that if you're domiciled in the U.S., like most of us on this call, everything that we own is pretty much included in our estate for estate tax purposes. For the non-resident, it's just the assets that they own in the U.S. It could be a house, it could be a car, could be bank accounts. All those things would be included in their estate. Now, there are some rules. We're not going to get into them today, but there are some differences between gifting between U.S. residents and U.S. citizens. There's some minor type of differences. But the most important thing I feel is going to be this slide here, which is talking about, or this page, what is the impact of a person being a U.S. citizen and their estate tax? So if you're a single person, you know your estate tax today exemption is 13.99 million. That's straightforward. If you're married to a U.S. citizen, like many of us probably are on this call, when we get two of those, right? We get 13.99 and 13.99. That's your classic estate planning case, your ILET case that many of us work on. Now, when you're married to a resident alien or non-resident alien, or you have a resident alien married to a U.S. citizen, all these different combinations, it does matter who dies first. So let's take an example of, say, you're a resident alien married to a U.S. citizen. Well, that U.S. citizen gets the 13.99, as does the resident alien. But let's say you're a resident alien and you're married to a non-resident alien. Well, the resident alien gets the 13.99, but the non-resident would only get that $60,000 exemption. And then lastly, you've got the non-resident alien married to these different, U.S. citizen, resident alien, or non-resident alien. Again, the $60,000 is the big issue. So when you have these upper ones, I was in this circumstance when I got married. My wife was a resident alien. She'd been living in the U.S. for probably 20 or 30 years, but then decided in 2016 to become a U.S. citizen. Well, now, we went from, kind of U.S. citizen married a resident alien, or resident alien married a U.S. citizen, right? Depending on if I died first or she died first. There are implications here. But now that she's a U.S. citizen and I'm a U.S. citizen, I was always a U.S. citizen, we get all the perks that a U.S. citizen gets. So, what's the takeaway from this page? One, when you are a resident alien, you're taxed on your worldwide assets. We remember that. You do get this 13.99 exemption, but it does matter who you're married to. So if you're married to a non-resident alien, you don't get the estate tax marital deduction, which means, assets can go back and forth between spouses. As many of you know, there's no gifting between spouses, no issues, because, the government recognizes that a married couple can just give each other money and gifts all the time. They don't need to report that, right? They're kind of one financial unit when it comes to that kind of thing. But when you're a resident alien married to a resident alien, or a non-resident, there's this qualified domestic trust that they refer to, that can preserve some of that estate tax marital deduction. But in the real world, or a more logical solution, is life insurance, because this person is going to have to create this trust with their attorney. And what they're really doing is creating a situation where they have some liquidity at that first person's death. Well, with life insurance, we all know the liquidity is there 3 or 4 days after you die. So an alternative to a QDOT would be buying life insurance either at the first death or the second death. So we're going to get into the countries in a moment, but I do want to just kind of talk a little bit about writing this business. So we're going to, kind of get into the life insurance, because when you have a non-resident alien, like I said, there's more hoops to jump through. So again, non-resident alien is basically someone who spends more than 6 months a year outside of the U.S., or they may also have dual residency, but their primary residence is outside of the U.S. So I have an example here of a Swedish citizen who owns a home in Sweden and lives in the U.S. for less than 6 months a year for business purposes. So that person would be considered a Swedish resident. Some people, be aware, are in the process of becoming a U.S. citizen or getting a green card or so on and so forth. But the time that you're writing the app, they might be considered a non-U.S. resident. Bear that in mind. Even though they haven't gotten to the point where they're a U.S. resident, if you write them today and they're a non-U.S. resident, that's what you have to write them. You can't assume the underwriters are going to say, well, in 6 months from now, they'll be a resident. Well, in 6 months from now, then you write the app. In terms of the application itself, everything has to be done in the US. I know Gonzalo would love to send all of you over abroad and pay for you to write applications, but that's not reality. That's fantasy land. So the whole aspects of the insurance transaction must be completed in the US, from solicitation to policy delivery. So you've got that prospect, maybe they're from Europe or South America, Africa, or Latin America or Asia, and they come to the US maybe 2, 3 months a year. That's when you write them because you're not going to fly to China to write them. We know that. So we do want to see some type of nexus, meaning, what's their connection to the US? It just can't be an arbitrary person visiting. Obviously, if they're a US citizen and they're living abroad, they're still considered a non-resident, right? Because if they're living in China and they're an American citizen, they're still considered non-resident. But that nexus has been satisfied, or their spouse is a U.S. citizen or a U.S. resident. We see that a lot with China. Maybe one spouse is an executive in a Chinese company, maybe, or a company doing business in China, and then they have one spouse in the U.S., perhaps raising the children or with the grandparents or that kind of thing. Or they own real estate in the U.S. That's an easy nexus, right? I own a home in the D.C. area, and I'm from Africa or South America. Well, that checks the box of having a nexus. If you're employed by a U.S. company, you have a U.S. tax liability. We talked about that, the estate tax. We do like to see, and any of these are okay. Not you don't need to require all of these, but if they have ownership of U.S. assets for a minimum of 6 months and equal to 25% of their net worth, or a minimum 500,000, meaning let's say they don't satisfy any of these other arrows, these bullets above, um, but they have U.S. assets with a minimum of 500,000. I would say most of you probably have prospects who have that, right? I mean, a home in the DC area is going to be worth more than $500,000. So you've already checked that box. So think of this as just being kind of an entry level kind of requirement. Any nexus to the US, any of these, not all of them, just one of them is fine. We find, particularly in the banks and the wirehouses, that this is easy because they're usually managing money or have clients who are worth a lot more than $500,000. So think of this as pretty straightforward, pretty easy to satisfy. One thing that does come up is this EB-5 visa program. This is a fast track to getting a green card and eventually becoming a U.S. citizen. The government a number of years ago said, hey, if you're a foreign person and you come to the U.S. and you start a business and you hire Americans and you have Americans on payroll, we're going to fast track you for a green card. You're going to jump ahead in the line. So if you're aware of any clients or prospects of the EB-5 visa, perhaps you network with attorneys or immigration people and they are aware of people with EB-5 visas. That's a perfect market because obviously they're here in the US, they're creating jobs, the government loves them, Prudential loves them. So any type of EB-5 visa individual, that looks really good because it implies they're creating businesses and jobs in the US. Will issue pretty much any age. Young people gets a little bit weird because you don't want to insure a 10-year-old for $100 million. That looks a little odd, and that would be the same in the U.S., right? So usually we see people in their 20s to their 70s. The minimum face is 250. The average face on the foreign national is closer to $4 million. So people that we see are applying for big face amounts. It's typically permanent, although term is available as well. We don't really care what product. They want to buy term, they want to buy survivorship, they want to buy any type of VUL, IUL, all of it is available. So that's good because we don't have a different category of products. So let's get into Gonzalo's question. So you got a non-resident, right? And he or she tells you or tells the producer, hey, I'm from XYZ country. That's where I predominantly live. Well, we want to know where they predominantly live because there's some countries, let's be honest, that are more risky than others. And what I mean by that is think about somebody maybe who is in a war-torn country or a country that's having severe economic problems. your life expectancy, let's be honest, is going to be affected by a war-torn country that you live in. You might come to the U.S. a month for a month, but you're going back to that war-torn country, or you're going back to that economically difficult country. So, like most carriers, we split these countries into categories A, B, and C. And A is all these countries here, which means preferred best. You can write them, isn't any issue. It's a mix of countries from Europe, Asia, Latin America, certainly plenty of countries here. B countries are countries that the best we can get is non-smoker plus. And then there's a whole mix of countries here in the middle, kind of in the yellow, that, some of the urban areas are A, like most of China, the urban areas are A. Some of the more, say, suburban, smaller, somewhat smaller cities are B. And then the absolute rural areas are C, meaning they're not acceptable. But you have areas like Colombia that have B and C. Ecuador is a mix of A and B. So one of the key questions you want to ask, or at least find out when you're in this market, is where is this individual, again, a non-resident, where do they primarily live? They live in Sweden, no problem. If they live in India, you're going to want to know, are they in, Calcutta, Delhi, are they in Mumbai? If they're not in one of those major regions, then it's going to be a little harder because those C regions, those rural areas, are not acceptable. And rural obviously means, there's rural medicine, there's probably rural care, and it's a lot harder to issue a case when people live out in the rural areas where medical information and medical service, frankly, is much harder. I mentioned Mexico. We see lots of business here. Most of Mexico, the big cities are A, and the rest of it is B. So if you have any Mexican prospects, it's a great market, as is Peru as well. So I'm going to just take a moment here and stop, see if there's any questions so far. I think I see some in the chat, but I wasn't sure if anyone had answered them or if you'd like me to answer them.
Um, Vicente, um, oh, one of them was, what are the requirements regarding the medical exam and where it needs to take place?
Yes, all in the US. So what typically happens, Kathy, is let's say I'm that individual, right? And you're writing me, or one of your producers is writing me. I land in DC or I land in New York, and I'm going to be here for a month visiting my kids, or maybe I'm going to a college reunion, right? And I'm going to be here for a month. Well, then what I would do is I'd get together with my advisor after I check into my hotel or my Airbnb, and you write the application right there. Then you schedule, maybe you did this already, you schedule the paramed maybe, for next week or the end of the week. And then the paramed comes to my hotel, Airbnb, or whatever, and any requirements I have. So you're going to do that during their visit for the non-resident. And then hopefully by the time they leave, the policy is issued. Now, obviously, if they're going to come here for 3 days, you're not going to get the policy issued. I don't think anybody's going to expect that. But if they're going to be here for a month or 6 weeks or 2 months, 3 months, then I would say write the application shortly after they arrive, and then we'll get all the medical information and hopefully we'll get it issued by the time they leave. So that's a good question. We have a lot of firms around the country who specialize in this market. So it's almost like a concierge service. They make sure the client, as soon as they're settled into their hotel or their Airbnb, they've got the application, the advisors there, and they meet with them. They take the application and they submit it. Maybe they even do an informal with some, basic information so that Lenny can get the, underwriters involved and get the ball rolling so that by time you take the formal application, maybe, 70% of the work has been done. There are some countries, and I think Gonzalo was, kind of referring to this in his question. There are some countries that are just very difficult for us to issue policy to their residents. It's because they have laws that prevent their residents from buying life insurance. So, Argentina, Italy, Japan are three prominent examples. And if you're a Japanese resident, Japan says it's against the law for their residents to buy life insurance from a non-Japanese carrier. It's against the law. So Prudential is not going to break the law to write a Japanese resident. We're not going to break the law to write an Italian resident or an Argentinian resident. Now, if they come here, the Japanese resident, and they move here and they live here, and they become a resident of the US, no problem. We see that a lot with Japanese residents moving to Hawaii. And so what they'll do is they'll spend maybe 7 months, 8 months a year in Hawaii, and then 2 to 3 months back in Japan. That's fine because their primary residence is Hawaii. But if their primary residence is Japan or Italy or Ireland or any of these countries on this gray list here, we cannot write them because we would be breaking the law, and Prudential cannot break the law to issue a policy. Um, South Africa, by the way, we certainly do the bigger cities like Cape Town, Johannesburg, and Pretoria, and they're A, saying it preferred best. All the other areas are B. There are some countries in this C section here that are just the risk is too big. Now, for example, Israel stands out because Israel was always an A, but with what's happened over the last couple of years, we temporarily put them into C. But for the last 25 years, Israel's been an A. So I think as things get better there, you'll see them go back to A, but for now, they're there. So countries that are on this list are here, some of them for a long time because they're, like Russia, or Syria, they're going to be there for the foreseeable future just because of the issues there, the war there. We have U.S. government sanctions against those countries. So certainly you're not going to run a right business for somebody who primarily lives in North Korea. Now, if somebody, is living in Israel for the time being, we can't. But if things improve there and they go back to being an A country or a B country, then you can write them. But think of these countries as being countries we just can't write residents because of the risk. And
Well,
so that's the
Vicente,
issue.
let me ask you this: these country lists within the different categories, is this uniform for all of the carriers that are in the foreign national marketplace, or, for example, could Prudential write a country that perhaps one of your competitors would not, or vice versa?
Um, it's possible, certainly possible, Kathy. I think one of the reasons why it's possible is because this is a living document. We're updating this document. We used to update it every year and a half. We've been updating it lately every year. In some cases in Israel, we did it in the middle of the year. So it could be that a country that was, on this list here is now moved because things have improved. For example, I know for many years Colombia was really risky, right, because of all the issues that they have with the terrorists and the guerrillas, and now all of a sudden Colombia is relatively okay. So other carriers, hard to say because I know that they're also trying to comply with the government restrictions. So I would say, Kathy, for example, the Sudan or Syria is and Russia are gonna and North Korea are gonna exist on every list of every carrier. But there may be some subtle differences with some of these smaller countries, like Fiji or Cambodia. It's hard to say, but we do an analysis of the other carriers. But to be honest with you, 90% of the business probably comes from about 6 to 8 countries. So you may run into a case once in a while from Iran or from Honduras, but that's not going to be the majority of the cases, right? That'll be the kind of the one-off. So very good question. So the big takeaway here is you've established you have a non-resident alien either as a prospect or a client, and now you're going to reference this list to see where they are at. And if they're, here under the C, you can't write them. If they're under this gray area, it's against the law for us to write them. But if they're anywhere in this kind of uh, orangish yellow or under this kind of teal or under this darker gray, A, B, or this area here, you can write them as long as they're not in a C region.
And of course, if you have any questions regarding whether or not the country is acceptable, reach out to Agency One, and we will share that information with Vicente and his colleagues at Pro, and they'll come back to us with a definitive yes or no.
Absolutely, absolutely, Kathy. So what I wanted to wrap up with now is, we kind of know the game plan. We know that if they're resident aliens, it's normal business. Okay, we can just put that one to bed. Um, the non-resident business, we need to reference what country they're in, right? So I see Gonzalo had a question. I'll just backtrack and talk about Puerto Rico. one of the issues with Puerto Rico is not part of the NAIC, so they don't have to follow some of the same product rules. For example, my recollection from having worked there back in the 90s, there's no such thing as a MEC in Puerto Rico. Now, obviously, in the 50 states, there is such thing as a MEC. So, how do insurance companies deal with that? They're going to have, Puerto Rico products, or are they going to have U.S. products? And many carriers do have Puerto Rico products, but you can't sell the U.S. mainland product to the Puerto Rican resident. You have to sell the Puerto Rican product. So Puerto Rico has its own insurance rules, and so some of them are very advantageous. So if you're a Puerto Rican resident, certainly you may want to look at a Puerto Rican product. But we do have some Puerto Rican residents who have homes in Florida and they would prefer the U.S. mainland product. So they'll buy the U.S. mainland product as long as there are residents of Florida. If they spend 90% of their time in Puerto Rico and only 10% of their time in Florida, in our world, they're considered a Puerto Rican resident and therefore they should be buying a Puerto Rican product. We don't get a lot of business from Puerto Rico for that reason, because I think many of the advisors there's certainly a lot of career companies there, and they pretty much are able to handle that market. But we do have some folks who do have a home in Florida, and they try to spend as much time there as possible, and therefore they could be considered U.S. residents. So good question. So getting back to writing this business, okay, you want to get the process going. We like to see that the insured has a global net worth of 2 million. Now, you might be asking yourself, well, why that? Well, we're really not in the non-resident alien market to sell, $100,000 term policies, right? I mean, that's a whole different market. We really want to be in that higher face, higher net worth market. Now, a global net worth of 2 million is not a lot if you think about it, because if they're coming to the US to visit, they probably have money. They have a home back in their home country. They may have a home here. They may have bank accounts here. So we like to see a global net worth of $2 million. This is easy to satisfy if you're working with advisors in, again, the banks, the wirehouses, that kind of thing, or certainly the high net worth market. We talked about that nexus, which is really easy. That usually the one that they can satisfy is that $500,000 of assets in the U.S. Usually that's easy. That could be, like I said, your home for that matter. You pretty much check that box. We do have some paperwork disclosure forms. We don't need to really get into that. One question that does often come up is, hey, they don't have a Social Security number. We don't require a Social Security number. Prudential doesn't require a Social Security number. Frankly, most non-residents don't have it. Why would a non-resident want to pay it to a Social Security system that they're not going to get any money out of, right? If I lived in whatever, some foreign country, and I came here for a month or two, I don't want to pay any Social Security taxes because I'm not going to get any Social Security because I'm a non-resident. So, but 99% of non-residents have a tax ID, or what they call a TIN. And a TIN is a tax ID number, and it usually in the form of a W-8. A W-8 can be accessed. You can get one in about 30 seconds on the internet, and it usually there's different types. The W-8 Ben is the most common that we see. And most non-residents have this because they want to be able to deposit a check. They want to be able to buy a home. They want to be able, just the basic stuff. You just can't walk into a bank and not have a tax ID number and expect to cash a check, right? They want something. So usually they have some type of tax ID number, and any of these will suffice. So we're heading down the home stretch here. For the most part, you're going to try to get as much information prior to them visiting, right? Right. You can certainly get their height and weight, find out where their parents live or where their parents died, what their parents died from. Try to kind of do that field underwriting before they even get here. You probably already know their ages and their dates of birth. Obviously, you know their names. So you can try to get that going. In some cases, we'll require an APS for people over 50. Sometimes we'll, do the blood tests and the ECGs. We will want some kind of data verification, meaning we're not going to just assume verbally that they're worth 2 million. You got to have some data that proves that they're worth 2 million. And again, in most of the channels, that's fairly easily. If they had a U.S. driver's license, we'll want that, their MVR. That's pretty common. It's common for all U.S. insureds, like those of us on this call today, they would order a MVR. And then lastly, when it comes to China, sometimes we can work with, they had an exam, a U.S. consulate exam in the last 2 years. We don't see as much of that now because China seems to be clamping down on that. So folks just come to the U.S. and get that done. We don't really accept medical information in another language. So, you send us documents or they send you documents in Chinese. That's hard, underwriting documents. So that's why we rely so much on the visit, right? Somebody mentioned earlier in one of the questions, how does this work? Well, we're going to rely heavily on the paramed and the visit, right? So, when they do their height and weight and when they take their blood pressure and anything like that, they're going to rely heavily on that because it's hard to rely on Chinese, characters when the underwriters can't read that and they don't understand that. Now, if the client wants to get that stuff translated and sent to us, certainly we'll take it. But we're going to rely pretty much heavily on what is done here in the U.S. Terms of submitting the application, certainly, you're going to want to make sure that, you've worked with Lenny and kind of done some of that pre-clearing work with Kathy and Lisa and Gonzalo. Just, anything that you can do to kind of clear the path so that once you submit the application, it goes through, even more smoothly than if it's all just at once for the first time. I talked about the face amount for non-residents is 250. As I said, the average we get is about 4 million. So certainly we can go higher than that. I think we can go up to about 25 million on certain.
Vicente, are those limits locked in stone? So if somebody wanted a little less, is that a discussion that would be worth having with you?
I don't know if there's an exception. I don't know if the system, Kathy, will take less than a 250 face, to be honest with you.
Okay.
So uh, But certainly, we don't see those very often. But if someone wanted a smaller face, then unfortunately, I'm not aware that we've issued any face amounts below 250. Now, 250 of term is going to be pretty inexpensive. So even there, as you can imagine, there's not a lot of, business and money to be made there. But if it's an accommodation, certainly we'll do that. But below 250 is harder. The bigger issue that we have is some of the bigger face amounts on some of these other regions. So that's, you start getting into, the A, B, and C regions, and you get into rating classes. And as you can imagine, if somebody rated who lives in a rural area is not going to live as long as someone who's not rated who lives in, London or, you know what I mean, a major metropolitan area. One thing I'll add that's a little bit of an idiosyncrasy is Canada. We can write Canadian residents, but we cannot write VUL. And the reason for that is because the country of Canada considers VUL not to be insurance, they consider it to be an investment. First and foremost, an investment. In the United States, a VUL product is considered to be insurance first, an investment product second. But in Canada, it's the other way around. So again, we don't do VUL for Canadian residents, but if they come down here and you want to sell them IUL, you want to sell them UL, NLG, you want to sell them survivorship IUL, survivorship UL, no problem. But if you want to sell them VUL, we cannot do it because, again, they consider that to be an investment and not insurance. So the last thing I'll just wrap up with is how to go after this market. Certainly those of you that live in some of the urban areas and the suburban areas around the country, or certainly in the DC, Maryland area, it's perfect. I mean, think about the immigration there. I bet you this, I mean, it's probably more like 30, 40, 50% of households probably have at least one person born outside of the US. So your normal in networking marketing, either through your centers of influence, lots of people meet, parents through school. My kids go to an international school, international public school, and almost, I'd say, 80 to 90% of the kids, their parents were born elsewhere. And so that's just a perfect market. Think about your clients who might be attorneys or your centers of influence who deal with immigration. A lot of business there. They pay a lot of attorneys, a lot of fees to get their immigration paperwork going. And certainly those referrals are perfect. I think of like Business Networking International, like BNI or the Chamber of Commerce. Those are certainly great places to network. Real estate agents know everything. I mean, it's funny. That's their business. They know everything about everybody. And of course, part of their job is their networking too. They want to sell houses to these newly immigrated Americans and their newly immigrated individuals. So certainly real estate agents, tax advisors, CPAs, any type of business owner. Very common. I know just in my travels, a lot of South Koreans tend to own a lot of businesses. That self-employment is kind of a part of their DNA, particularly some of the service businesses. So certainly that's an opportunity there. If you think about folks who perhaps you're doing business with already, and maybe you haven't actually approached them because you felt, well, gee, this person was born in Colombia, and I don't even want to go down that road because I don't know enough about Colombia. Or take this example here of Andrew. He's a financial professional in Los Angeles, and there's a Taiwanese community, and he goes to this community with his family, and he meets Jeanette, whose primary residence is in Taiwan. She happens to be visiting her grandchildren, her son and his daughter and her daughter-in-law and their children. They live in L.A., so she loves seeing her grandchildren, and she tries to come as often as she can. Well, Andrew learns that she's actually owns a business and plans to buy a business in the U.S. She wants to spend more time here, but she wants to kind of grow her business. So Andrew sets up a meeting for her to talk about opportunities here. And of course, she eventually wants to probably be in Taiwan, move from Taiwan and maybe be a resident of the U.S. full time to be next closer to her family, but also running her business. And she'll probably maintain a presence in Taiwan, which is fine. You could certainly write her as a non-resident, but once she moves to the LA area, perfect. You can write her as a resident, and then it's even easier. So, as Kathy said, we're here to support your growth. Contact Agency One. Agency One will work with Lenny and myself. This is really good business for us. We have benchmarked ourselves against the other carriers, and so we've improved many aspects of our strategy here, and you'll find that we're comparable, if not better, than the other carriers in this market.
Hey,
The last,
Vicente, we've got a couple more questions, and
sure.
I encourage everyone that's still attending, if you've got any questions, please type them into the Q&A. The first question was for a non-resident applicant who owns property in the United States. Does the application have to be done in the state where they own the property?
It has to be in their state where they have their residence or whatever that property is. So if they own a property in Maryland, it would make sense that you'd write the application in Maryland. You wouldn't write it in California. Now the underwriters, this happens with U.S. business, right? Somebody's visiting or maybe they're traveling and you want to take the app. I think they can work with you, but it has to make sense, right, Kathy? It can't be, well, I'm just on vacation in California and I don't want to wait to take the application until I get back to Maryland. That's not a good enough answer. So usually we see them writing the business where that person has that property, that business, that nexus.
Terrific. And then another question is, can clients use a limited durable power of attorney to deliver the policy while the client is outside the United States?
Yeah, that was actually what I was going to bring up, Kathy, is sometimes your client comes and maybe they're here for a month or two and maybe the underwriting went longer and the policy's issued after they left. That has created problems in the past, right? It's not, you don't want to wait for them to come back and deliver it. So if you know right up front that they're going to be here for a limited amount of time and there's a possibility that they may actually be back in their home country by the time the policy is issued, tell us that up front. Lenny has a process or with the company, with our underwriters, well, he can let them know up front, hey, we need to exercise this limited power of attorney because Andrew is going to be back in Taiwan when the policy is a good possibility he'll be back in Taiwan when the policy is issued. You got to tell us that, Kathy, up front, so that way you can get the limited power of attorney paperwork going. But you can't tell us that right when you, well, I found out yesterday Andrew, left for Taiwan, and I'm ready and I want to deliver the policy next week. That's not going to work. So just tell us up front that there's a possibility or certainty that the insured will be back in their home country, and then Lenny can get that limited power of attorney going right up front. And so if you use it, great. If you don't use it, you had it. So it's a great question. That was one of the things we improved upon from our old system. We did not have the limited power of attorney, but now we do. Good question.
Terrific. And then someone else has asked, what are the parameters of who can be the limited power of attorney?
Well, it's really up to you. Usually that is, you work with that with your attorney. Um, in some cases, we've seen it be the spouse that's here. Let's say the wife is traveling, she's an executive, you write her, and then by time, it's delivered, she's gone back to, whatever country. But the husband is here. In some cases, you can have the husband either be the LPOA or maybe even have the husband be the policy owner. So there is some flexibility there, Kathy. We know we need to deliver it to someone in an official capacity. It just can't be delivering it to somebody arbitrary, right? Because then that creates issues. So tell us up front who you're thinking about. You get get with Lenny and we get all the paperwork going. Typically that limited power of attorney involves meeting with your attorney to get that kind of official. But if you let us know up front that possibility, the whole process goes much more smoothly when it comes to policy delivery. It certainly has to be someone in some type of connection to that insured, right? It can't be just some person off the street that,
Can't be the doorman at the building?
right, right. The doorman that takes your stuff and doesn't tell you about it.
Okay. I don't think that we have any other questions, and we are nearing the top of the hour. Vicente, do you have any other closing comments
I
before we
would
wrap
just
this
say
up?
the three things to remember is one, resident alien business, Kathy, is easy business. So I would say that's probably the easiest thing for your clients, your producers, your team. Secondly, when the non-resident comes up, as Gonzalo pointed out, know what country they're in. Find out that early on the process. If they're a B, or one of these kind of mixed countries, then great. If they're a C or one of these countries that's war torn and having economic problems, then you know that that's kind of no fly. And then the third thing is just remember they have to have some kind of nexus to the U.S. Usually that $500,000 one is total asset to the U.S. is easy, either a house or a property. And then if you have those three things, then I think you're much easier to go out and prospect the business because you know what those three requirements are.
Terrific. Thank you very much, Vicente. This was terrific, very informative. I want to thank you. I want to thank Lenny Paul, our uh, Prudential rep, who is doing a yeoman's job on Agency One's behalf. So if anybody on the phone has any questions, comments, or concerns about their Prudential cases, please reach out to us because Lenny is doing, as I said, a terrific job. Before we close this webinar out, I'm going to turn it over to Lisa Mitchell. She's got a few announcements about some upcoming webinars that I hope that our attendees will be joining us for because I think they will find them uh, at least as interesting as our what our friends from Prudential did for us today. So Lisa, we can't hear you.
Can you hear me now?
Yes.
Good.
Yes.
You just never know with these headsets. We've got two more webinars for the month of June scheduled right now. And I'll be sending out updated lists, webinar lists, in the coming weeks. But I believe next week we've got one on June 12th at noon. It's it's hosted by Symetra, and it's a unique guaranteed issue multi-life program that Doug Bowden, who is the director of advanced markets, will be discussing. And then on June 24th, we've got our friends at Nationwide at noon also. They'll be discussing why affluent clients need LTC and how to internally split a 1035 exchange for better purposes. And that's going to be our friend Sean Britt discussing that. And she is, long-term care, in charge of long-term care initiatives and advanced consulting group. And then we've got one coming up in July, but that's next month. So we'll be discussing that at another time. But be looking for emails from me on our upcoming webinars. And thanks a lot, everyone.
Okay, thank you, Lisa. Again, thank you to our friends at Prudential, Vicente and Lenny. This was terrific. On behalf of Gonzalo, Dennis, and myself, Agency One is very appreciative of your business and all of the opportunities that we continue to see from you. If you have any questions, comments, or concerns, please reach out to us. We are here to help you and look forward to doing so. Thank you for joining us. I hope everybody has a terrific week and that we see you on the next webinar. Thank you very much.